Right, Group B, welcome to another tutorial video of Vix community. So let's get straight to the business of today. No more formalities. We already know what we're here for. We already know the business of today. So last week, yeah, last weekend I was supposed to drop a video, you know, because we're about to enter liquidity in this period. This period I'm supposed to be explaining liquidity for Group B. But I took out time to examine the whole concept of everything there. There's some other concepts we need to understand before we delve into liquidity, because liquidity is like what all advanced traders use as their major confluence. You understand? Both ICT students, retail trader students, or anyhow, everybody would want to understand liquidity, because if you understand liquidity, it's like you are at the hallmark of your trading journey, regardless of how little you know. If you understand liquidity, you know a lot. But now, before we go into liquidity, I will need us to understand what we call key levels. Key levels. Let me bring out my little pencil. Right. I need us to understand what key levels are, because it's when retailers should mark out their key levels. That's what the hedge funds, the big boys, the big banks, institution, whatever you want to call them, those that have plenty money. Those are what those guys are going to use to sweep out retail traders. That's the key levels of the retail traders. That's what the big boys are going to use to sweep their money away. So, for instance, if you, okay, before I explain it, let's say you have your order blocks, your Fib levels, that's your Fibonacci levels, and your supply and demand level. Let's say, for instance, you mark your order block somewhere, you put your entry and your stop loss. Exactly where your stop loss is, that's where the boys that have money, that's exactly where they are targeting. And once they target it and it hits your stop loss, we all know that tends to be liquidity. Though I'll explain liquidity in the next video, but let me explain these key levels, which we're already familiar with. But these are the three main key levels I use for my own trading. You understand? I don't talk about fair value gaps and imbalances now. That's another deeper subject. But you see these three. If you're learning key levels, this should be what I would advise for you to start from. Order blocks number one, Fibonacci levels. See, these people underestimate these Fibonacci levels, like seriously, but it does wonders. And your supply and demand level, which we know as support and resistance, and your trend lines. I have reasons for joining these two together. Yeah, so let's go straight to the charts now. Maybe probably as we move further, I talked about order block in the last video, which I will expatiate on, and I'll talk about Fibonacci levels, supply and demand levels, and give examples of trend lines. I will just be touching them. You understand? As time goes on, I'll go into them deeper. So let's go to the chart. Like I explained the last time. Okay, let's say this is. Let's just look for a good trends to start from. All right. Let's look for the good trend. Okay, this is the end of the market. Yeah, like I said, right. Sorry about that. Like I said, in drawing your order blocks of the sell. If you want to sell now, your order block will be your last bullish candle before a bearish rally. Like this last bullish candle now before this bear run. That's where you mark your order block. So you mark up something like this. Mark up something like this now. Okay, shapes. Mark your order block like this. So you put your orders here, your sell limits here, and you put your stop loss slightly above the order block and see what happened. Immediately it hits it, it reversed. Let's give another example again. This was the last bullish candle before this bearish rally. Okay. Okay, see what happened here. Markets, remember you put your sell limit here, because if the market goes up to touch it again, you put your sell limit, you put your order above the order block, and see what happened. It's right down. Sweet. Let's look for another example again. And this is the last example I'm giving, or I'll give one bullish example. And this is it here. This last bullish candle before this bearish rally, and see what happened here. Price came back to it, tested it, and sold. See, now these order blocks, if you want to mark your order blocks, you make sure the market is trending either bullish or bearish. Don't mark your order block in a ranging market, like seriously. So the market was sloping downwards in this place here. You can see it was sloping downwards, making lower high, lower low, lower high, lower low, lower high, and lower lows. That's the only reason that is making me take sales. Now let's look for a bullish market. So we can mark one order block, confluence, and this market is just ranging and going bearish, like seriously. Oh dear, I think there was a small bullish trend here. Okay, let's use this trend here. Let's use the trend here. Okay, so now the for bullish order block now to be your last bearish candle before a bullish push phase. That's the candle you're going to mark your order block from. Okay, so objects, shapes, rectangle, and okay, let's start from market broke structure here. Let's use this guys here as example. Though I'll not have traded this guy, it has not broken this guy properly. No, this is not a bullish trend, but let's just anyhow. This will have been my order block here. Alright. You see, market tested it here, rallied higher. You understand? So what else again? What else again? Let me talk about the Fib level now, because many people are like, what's the Fibonacci level now? Which one is this one again now? So let me explain Fib level to you. This market is in a bearish trend now. The market is selling. You want to mark your Fibonacci level. You bring out your Fibonacci measurement to this it here. You see how it looks like. Any instruments that look like this is your Fibonacci level. So this, let me show you how to use your Fibonacci level here. I'll still make a clear video on that, but this is how you use it. You mark the swing high and the swing low. This is the swing low it's made. You understand? Then let's swing high and swing low. Yeah, this is here. This and this. Remember, the market has not done this. Now the levels I use to enter my trade in my Fibonacci levels are my 50.0 and my 61.8. This is 50.0 here, and this is 61.8. So I wait once the market reach this guy here like this. So my this I trade my fib, which I'll still explain better. I'm just showing you how the three key levels I use look like. I'm not really explaining them in details. You understand? I'll just do it like this, from the 50 to the 61.8. You understand? So the market, see how sweetly it does respected this 50.0 level. It tested this first time because of you missed that entry. It gave you another entry here and sloped downwards. Beautiful trade. You understand? And we all know what trend lines are, right? Trend lines is like, for instance, you bring out your slopey line and it does draw a line here like this, and you extend it to the future. So now you're expecting that if price should in any way, as price touch one, two, you're expecting that if price touch the third time, you will sell. Now the trend line is one of the ways that big boys used to eat retailers money very well, because if the hedge fund, the big boys, the people that have money see that you are using trend line, and it has tested the trend line once and twice, they will intentionally break that trend line, then sell the market. By that time, they will have taken your stop loss. See what happened here? We're expecting that if the market touches here, we will go short, right? But see what they did. See this long candle here. Yes, you see what this long candle represents. Know that banks have entered, the big boys have entered inside here, because no retailer, no matter how much you have, you cannot push the market up so fast like this. Is it news or big boys that can create this move here? You understand? So they took out. See, normally if you have entered a trade here, your stop loss would be probably around here, or your stop loss would be around here. But see what they did? They made sure they cleared this guy here. So even though you're using other block self, they will still eat your money. You understand? With this concept, I will explain it very well when I start talking about liquidity. But I just want you to understand that trend lines, support and resistance, and supply and demand, whatever, and other block, all these things only work when you know how to work with liquid, how to work on liquidity very well, and how to spot liquidity very well. If you can spot liquidity very well, you know the other blocks that are valid, the ones that are not valid. You know the trend lines that are valid, the ones that are not valid. You know the supply and demand zones that are valid, the ones that are not valid. And your fib levels, you know how to mark them properly if you understand the concept of liquidity. But these are the three major key levels I'm going to be working on using teaching on liquidity. These are the three key levels I'll be talking on. Other blocks, I'll tell you how to use other block properly when trading liquidity. Teach you how to use your fib levels very well and teach you how to use your supply and demand zone very well. So just watch the video and ask questions. Like seriously, see these three key levels. This is what we're going to be sharpening our tools on. Like seriously. So guys, watch this video again and again. Ask questions. Cheers and God bless.